Hello, my name is Dawn Jobson, and I'm reporting for TCMN's Voice of the People Civic News Program. Today's feature is a town hall discussion presented by the Toronto Danforth Provincial Liberal Association in response to the Eastern community's questions and concerns regarding housing and mortgage policy changes brought about by the coronavirus crisis. The town hall was organized by Lee Koo, a realtor and community leader in the Danforth Village East York community, who sought to address the many questions posed to her about the housing market, mortgage rates, and landlord and tenants issues by reaching out and engaging the community at large to share their first-hand, real-time accounts of how the government's changes affect them in their city village. To date, the provincial government has made temporary changes to the Residential Tenancies Act to protect tenants from eviction and to provide guidelines and remedies to landlords during this time. Real estate services continue as they have been deemed an essential service. Although, as the real estate governing body RECO, the Real Estate Council of Ontario points out, it is not business as usual. In March, it was reported that banks would defer mortgage payments to those who qualify for up to 6 months. However, there was and is some uncertainty regarding the application of interest. In a recent sitting in the House of Commons, NDP leader Jagmeet Singh called on the government to put the brakes on banks charging interest on mortgage deferrals. When governments make changes that affect our daily lives as Canadians, the results play out differently from community to community. The Danforth Village of East York is no exception. Presented in this video are neighbors having real talk about the changes in one of Toronto's distinct communities. For those of you looking for more information on housing issues and the real estate market, a list of resources has been included at the end of this video. Thank you for tuning in to TCMN's Voice of the People Civic News Program. Please stay safe and stay inside.
Hi, everybody. I just wanted to take a moment and welcome you all. Karen, should we get started?
Sure. So welcome everyone to Toronto Danforth Provincial Liberal Riding Association's first virtual town hall. I hope everyone is staying safe. I'm pleased to have you participate in our discussion on some of the housing realities that people are facing amidst the COVID-19 crisis. Everyone is in a new reality now, but despite that, the members of the Riding Association wanted to continue to reach out to our community. This is our first town hall, and we hope to host additional town halls on the issues of importance to everyone in the East End. Our next one will be focused on mental health, so stay tuned for the details. Before starting, I would like to thank Kelly Lynn Ashton, our communications chair, and Lee Koo, our former Liberal candidate in Toronto Danforth, for organizing the event tonight. And thanks to each of you for attending. And of course, special thanks to our panelists. Lee is going to be the moderator, and I'd like to call on her now to introduce our panelists and describe the format for our discussion. Thank you very much.
Thanks, Karen. Thank you so much for your wonderful words always. So obviously, I would like to extend my gratitude for Toronto Danforth PLA for hosting this town hall, because ensuring that members of our community are connected and getting the latest information about issues that are top of mind has always been something that the members of this community have always cared about. So we will definitely be looking at hosting more town halls in the future, so please stay tuned. Now, the format of this event will be a round of introductions, and then we will focus on each area in the following order: mortgages and financing, tenant issues, and then the landlord perspective. This will be followed up with live questions from the participants, and you can, text it, or you can raise your hand and ask it verbally. Kelly Lynn will unmute you. So this will be a very engaging opportunity to connect with everyone. So one of the things I also wanted to say is that I wanted to take a moment to acknowledge that our mortgage specialist is Lynn Gibson, who is here, and she's here in Dory Stewart's stead. Unfortunately, a family emergency arose that Dory had to attend to, and so she sends her apologies and wants you to know that she's okay and that she's very sorry to miss this. So without further ado, let me move forward with the introduction. So as your moderator for this evening, I'm bringing two perspectives to this conversation. First, a professional frontline experience as a real estate sales rep at Bosley Real Estate, and also in my capacity as Regional VP of Toronto for OLP, and a resident of Toronto Danforth. Now, I'm going to turn it over. I'll introduce Lynn Gibson, who is our mortgage specialist tonight, Sean Carson, who is representing Tenant Perspective and is a member of Kelia's Tenants Network, and LJ Savage, who's the residential landlord. So I'm going to turn it over now and ask each panelist to give a quick introduction of themselves. So Lynn, would you mind kicking it off?
Certainly. Hi, my name's Lynn Gibson, obviously. I'm a mortgage broker with Neighborhood Dominion Lending Centers. I've been doing this profession for just over 10 years now. My background is that I am a CPA, or a Chartered Professional Accountant. So I was in the corporate world for a little over 20 years, and then got led into this industry, which, you know, I really enjoy, because it's like moments like this where we get to help people, educate them, and you know, as a resource to individuals, as financial guidance, and to help them through their journey in life and prosper.
That's awesome. Thank you, Lynn. Really looking forward to our conversation. Sean.
Hi, I'm Sean Carson. I'm a resident of the Toronto Danforth riding too, and I helped organize two tenant associations when my building was bought by a multinational landlord named Kelia's Canada. We organized a tenant association at 12 Bader Avenue, and after experiencing problems with our landlord and having to organize there, we connected with other tenants associations to form the Kelia's Tenants Network. Kelia's Canada is, like I said, a multinational landlord that has about 59 buildings in Toronto and about 78 in the province of Ontario, with 3,000 to 4,000 units, about 7,000 or 8,000 tenants. So after experiencing some of their practices, we got a crash course in tenants' rights and found ourselves having to organize. We're all volunteers, trying to facilitate the growth of tenants associations and educate each other on tenants' rights.
Thank you, Sean. Looking forward to having more of a discussion with you. LJ.
Hello, I'm LJ Savage. I'm the Director of Production of Soul Pepper Theatre Company down at the Distillery. I'm a resident of Riverdale and the Toronto Danforth riding. I am a small landlord, per se. I purchased my wife and I purchased a second house in 2014 as a retirement, different choice as a retirement choice. And for other reasons, we came in with a little money and decided to buy a second house, rental property, income property in 2018. These are all single family houses divided into apartments. Our underlying motive was to provide a subsidized housing for our children as they grew up and were kicked or moved out of the house, and had an ability to live in Toronto a little better than others. And that's still the focus, although only one is living in one of the houses now. The intent with the houses is not to, although the term is an income property, I'm not looking for income. The properties are the rent is based on an equal division of apartments based on mortgage fees, insurance, and other upkeep on a year-to-year basis, and that I try to keep my rent down. I'm always surprised when people say, or when I hear on the news, that the average rent is X in Toronto, and I'm substantially below that. And I have no problem with that. It's not an intent to make money. It's to provide, as I say, the other reasons. I keep hearing of the rent strike idea, and that kind of disappoints me, not because of the idea of it. As a matter of fact, I'm sure Sean will speak to that within the context of the big landlord, but my belief has always been to have a consistent line of communication with my tenants. They're not friends, they're tenants, but to always have communication. If their needs are not being met, we can certainly talk about it and find ways in and out of situations. So although it's not been brought up, I know that everybody in those locations are having problems with paying rent, and I'm open for discussion.
Awesome. We're going to have a really great conversation. So for everybody who is a participant, your questions and thoughts are very important. And we've got amazing experts here to answer any of your questions. And one of the things that I thought that we should start with is, you know, let's recognize that before COVID-19 happened, the Toronto real estate market was so hot, and this spring was on track to break records. And I'm going to try and show my screen here just because I thought it might be helpful. Let's see here. Is it showing my screen?
Yes.
Oh, now it is.
Oh, hold on. I think this is the screen I want. So it's all black. Okay. Oh, here we go. Okay.
The market snapshot.
It gives you a market snapshot so you can look with your own eyes visually in front of you that this is the recent these are the recent numbers of March, okay? So it just ended April 3rd. And one of the things that you'll see is that in the city of Toronto, even comparatively, the fact is, Ontario was declared a real estate as, the Ontario government declared real estate as an essential business. Housing and shelter is a basic human right. But I want to say that with COVID-19, business is not as usual. Ontario Real Estate Association, TREB, Toronto Real Estate, all of the professional real estate associations have urged everybody to stop doing face-to-face business. And so open houses are not allowed to happen. And so if people see a unit, a lot of brokerages have stopped in-person showings and they're moving towards online virtual tours and virtual open houses. So that has really slowed everything down. And why? People are choosing to self-isolate. They're putting the health first. Many folks who were in process of like thinking about renting, selling, or buying, they're like, you know what, let's take a pause. Let's focus on what's important like now. I don't want to have strangers going through my house. I don't want to be going into strangers' house. So the market has really kind of slowed down. Now, all of this kind of took an impact down in March, and we can see these are based from April ending April 3rd, that even though things have taken a pause, we can see that year over year, the cost of housing in Toronto, the cost of housing in the GTA area comparatively is still much higher than what it was last year. So where does this go? Right? Like we know that there was pent up demand before COVID-19. I imagine that demand is still there and it may actually be growing, and people are waiting and seeing. Even though there's so many other events, we know that, I've been active during this time, and 3 weeks ago, I was in situations where it was 15 to 30 offers on one house or unit. Now what you're seeing is people are still interested. And instead of 15 to 30 offers, we're looking at 2 to 3. And, some houses aren't moving, but the point is that there's some sellers who are like, look, if I'm not going to get the price I want, I'm not going to accept just any price, right? Like people are like, oh, is the bottom going to are things going to bottom out? People are like, nope, I'm not going to panic, just going to wait and see. And they're like, I'm going to terminate the listing and I'll just wait it out. So I want to say that, there are lots of buyers, there's still lots of sellers, but everyone has basically just taken a pause to deal with the realities of what COVID-19 is at the moment. And what I do know is that with every historical dip in the economy or slowdown in housing, whether it was 2008 or 2017, the market rebounded and it continued to increase in value over time. So the question is, how long will it take to increase in value, right? And that's a question where we are in unprecedented times. Things are changing on a weekly and a daily basis. But tonight, what we're going to talk about, I just wanted to give you that background of the housing market up to this moment is, what does this mean from a buyer, seller, current homeowner, investor, and tenant perspective? Answering your questions, talking about these issues, presenting these perspectives. We've got 3 different experts from 3 different perspectives here. And so I'm going to take it over and turn it over to Lynn, because I think one of the questions that I have heard from so many of my clients is, and people have heard in the newspaper, mortgage deferrals. Who qualifies them, right? So Lynn, if I can turn that over to you, if you want to take a next jump.
Certainly. Thank you, Lee. So mortgage deferrals, so the banks have agreed to help us through this very, very difficult time. And they are basically offering 6 months of a mortgage deferral. So what that means is that's not forgivable. That does not mean you never have to pay that money back or anything else. What it is going to allow you to do is increase your cash flow by not having to make those mortgage payments during to that 6-month period. Who qualifies? Well, you have to be a person in need and have lost income as a result of COVID-19. So just because you'd like to take a payment holiday for 6 months and you're still working and there's no change in income, you're not eligible. You do have to apply, and every lender is going to look at it on a case-by-case basis. You know, I think they're pretty open in their approval system. You know, it's not a strenuous, 5-page application, that kind of thing, but they are qualifying people, just making sure that, they are truly in need.
So Lynn, can landlords qualify for deferrals?
Most certainly. So as a landlord, and what's going to look at then, they're going to mostly look at, is your tenant paying? Because if your tenant is paying, then that's the status quo. So why can't you afford to pay? And there might be extenuating circumstances there that they would consider, but certainly you could have the option of deferring both your personal home and your investment property mortgage as well.
Okay. So is it a good idea to defer?
Well, it's again on a case-by-case basis. It is not in your best interests to defer. If you can make the payments, make the payments, right? Because it's not a zero interest, it's not a forgivable loan, as I mentioned before. So you are deferring. So what ends up happening is, and you need to speak to your individual lender because they all have come out with different policies and different programs. But basically, there's 2. Most lenders are saying we will defer the payment entirely. We still charge you interest. Interest is accruing, but it's going to get added to your mortgage balance at maturity. So, if you deferred $5,000 worth of payments, we'll just say there's going to be $5,000 more on your mortgage balance at maturity, which means when you go to renew, your payments going forward are going to be a little higher. Some other lenders are saying, and the majority are doing that, but a few are saying, no, I will defer your mortgage payments for 6 months, up to 6 months, but I am then going to increase your mortgage payments for the balance of the term so that at the end of maturity, you end at the same balance. So it's you're already stuck with that lender. So you don't really have a choice to move at that point, but it is very important to understand your lender's policy. Okay. So is it a good idea? Well, you know what? It's if you need to do it, you need to do it. If it's the difference between putting food on your table and whatever other obligations that you need for, then do it. It's not the cost of it. There is cost, of course, because typically you're going to have a mortgage payment of, let's just say it's $1,500, and so much of that goes towards interest and so much goes towards principal. So you're not paying any principal down. So your interest is a little bit higher. But it is an olive branch reached out to you to help you survive. It's a mechanism. Skip the payment and not talk to your lender. You must speak with them. You must apply. You must agreed upon by both parties. Then no impact on your credit score. I do recommend to people that they still get that call in writing that they have been accepted. Just the outside chance that, later on, for whatever, some paperwork got lost and it hit your credit score, just as a safety catch. But no, it will not impact your credit as long as both parties are in agreement.
Okay, so that's good to know. Now, I wanted to sort of take the question, bring up another question that so many of my clients have raised is, we hear about the central bank rate dropping interest, right? So interest rates were like, oh, super low, super low. But then all of a sudden, what I was noticing was that mortgage rates were actually going up. So my question is, why did the rates drop so low, for a short period of time and then have it rise again?
Well, isn't that the question of the day? And even as a mortgage professional, it was like, what the heck is going on here? Okay, so at first drop, the market reacted the way they should react to a decrease in the Bank of Canada rate. And that is to have a corresponding decrease in interest rates. But then, everything was moving so quickly, and this is in uncharted territory to us, right? Well, then all of a sudden, the banks realized that we can't keep up this way. So even though the rates were dropping, they had to increase their rates. Let me just take a step back here for a second and understand that there is one thing that drives fixed rates and one thing that drives variable rates. So the Bank of Canada rate is helping those people with variable rate mortgages or lines of credit that are secured against their home. That affects those interest rates. So first of all, that wasn't everybody. That's only a percentage of the population that has variable rate or home equity lines of credit or HELOCs. So what happened was, anybody who did have a mortgage in existence, by the way, it was a variable rate or a line of credit, got a great deal. I got clients now that, 3 years ago, we got them a mortgage at prime minus 1%. So they're paying 1.45% for their mortgage. But those entering or needing a refinance or a purchase, we're not seeing that. And the economics of this, I could take up the next hour, but I'm going to try and make it as simple as possible.
Well, I'm sure that
We've all heard. Pardon?
Sorry, go ahead. You were going to say something?
So we've all heard about supply and demand, right? Economics 101. So the problem is banks, how they get their money is that you put the money in, they give you, say, 1% interest on that money, but they loan the money out at, say, 3%. The difference is the spread. Once they've got paid their administration fees, that's how they make their money. Okay? So the problem is the supply is not coming in. Businesses aren't making their deposits. People aren't putting their payroll in. All sorts of ways that the bank would get money is not happening. So they aren't getting the supply. People aren't going to be paying their mortgage payments, right? These are all supplies, ways that they get money. But the demand is very high.
Yeah.
So we take that, and so the bank says, I still have to go get money. Well, they aren't borrowing at that 0.25% Bank of Canada rate. They actually switched that a few years ago, and they're buying more money at about 1.25%. And if they can't even get it there, then they're going to investors. And investors are looking at it and say, well, just a second, there's a lot of uncertainty here. And we don't know if these people are even going to be able to pay their mortgages. In Canada, we've typically had a very, very low default, but that might not be the case. So there's a lot more risk associated there. So the cost to the banks have gone up. The risk to the banks have gone up. As a result, the mortgage rates have gone up. That's the kind of, it's simplest. So it's, of course, a lot more complicated.
No, I think that's really helpful. So, I mean, if anybody's in a position to refinance, or, I mean, I had someone who just bought a house like a few months ago, and now he's like, I think it actually makes more sense for me to refinance at the rate that mortgages are right now, right? And he's like, I just got to figure out $20,000 to pay for my penalties. Would you recommend, like, is now a good time for people to refinance or renew?
Well, each person has to look at it on an individual case. You got to have some pretty good interest rate decreases for $20,000 penalty. But so, is it a good time to refinance? If it all makes sense on an individual basis. So, at any time refinancing. So have you got some high interest rate debt like credit cards, that kind of thing to pay out? Is it going to improve your overall monthly cash flow? Especially if you think that you may not, now, if you're going to refinance, you want to refinance while you have you're a paying job, not when you're laid off. That's
the other question. Sorry, I want to ask you, can someone refinance their existing mortgage if they've actually been laid off? Like, in this time now of COVID-19, many people have been furloughed or lost their jobs. What happens if they're in this place of uncertainty?
Well, exactly. So lender policy have this week and last few days come out and said, we want to see the income documents up front. If they don't have a job, some have even gone to as far as, even if they're working, unless they're on the essential list, we don't want to talk to them. So it's, I mean, again, the bank, and you can't appreciate it. I don't want to go into a mortgage with someone, give it to them, and then they're going to go 6 months default.
Yeah.
So that is in the prime lending space. And when I say the prime lending space, best rates. Okay. Right. So do we have some options in the alternative lending space or the private lending space? Yes. But it's important for people, if they think they're going to need something, that they act now versus when they're in the need. Because when they're in the need, it's going to cost them a lot more money because now they don't have the job. They aren't income qualified.
Right.
Let me take an example outside of COVID-19. Somebody who wants to start up their own business. Well, get your financing in place while you have the job. Don't quit. And then say, now I need money to finance my business. Make sure that the order is in the right place.
Can you repeat that order for me again?
Pardon me?
You just cut off for me. So do you mind repeating what that order is? If you do need to get financing, what is the order that you should be going in?
Okay. Do it when you think you need, not when you do need.
Okay.
So put things in place in the time when you're going to qualify, right? So, like as I said, the person who turns into business for self. So if you think there's uncertainty about your job, but at this point you're in a good position, but you're worried, then do it now, not when you get there.
And also even like the idea of people who might be working and thinking about retiring, that while they still have a job before they retire, they should probably apply for, refinancing or those type of things, right?
Oh, agreed. So especially for people going into retirement, COVID-19 aside, always suggest that, you should maybe have just a secured line of credit on your house. Get it while you can qualify. And those cases of emergency, like you don't know what might happen in the future. So anybody My motto is always, anybody who is responsible with money should have access to cheap money at any time, because you never know what life is going to throw you. And did we all learn that lesson with COVID-19? Who thought?
Yeah. I have one more question. What happens if someone applied for a mortgage for a purchase and then they just lost their job sort of midway through?
Well, yes, we got a few in that situation. Actually, it's not uncommon. So, the lenders, they really want to do everything they can and are coming up with very good solutions. Some of them temporary. Some have just said, fine, if the mortgage was approved prior to this day and income was qualified, regardless of the current situation, we're going to move forward. So again, it's a lender by lender policy, but I'm going to say that they all have really come up to the table here. They want people to keep their homes, right? Shelter is a right in this country still. It isn't in many others, but in this country it is. We don't want people on the streets. Yeah. And quite honestly, the last thing the bank wants is to own the house. They'd rather that you just stay there and that there be a plan than to kick you out. It's not, and it's not in their best interest. It's not in nobody's best interest.
Yeah. Well, I think that that's really awesome. I really appreciate it. And for all of our attendees who are here, if you have any questions, and you're thinking about it, I'm going to go over to Sean right now to talk about the tenant perspective with a commercial landlord. But Lynn is here still, and then we will be opening up the floor to questions. So feel free to type it up, or if you have any questions, put your hand up, and we'll address that after we have every participant go through. So Sean, thank you so much, Lynn. We're going on to your piece here because I would love to get for you to give me an overview of the housing situation for tenants now before COVID-19 crisis hit.
Okay, so before the COVID-19 crisis hit, the Toronto market in particular was already very fragile. We had in Toronto, nearly half the households are tenant households, and of those tenant households, half, actually just slightly over half, pay more than 30% of their gross income in rent. And so we already have a lot of people in Toronto in a potentially precarious situation where there's not, because that greater portion of their income is absorbed by rent, there's less ability to save and a higher likelihood that they are month to month in terms of their rent and relatively precarious in terms of their housing situation. It's not new. We've seen it coming for about a decade. One of the reasons, for instance, that I became involved with trying to organize tenants associations, my home was bought by a multinational landlord that liked the market conditions in Toronto and saw a chance to make a lot of money here. And they liked the idea of vacancy deregulation. In other words, they could charge whatever they want when the unit becomes free. They liked access to above guideline increases, and they liked access to the kind of financing and the tight housing situation. They're attracted to the idea of a 1% vacancy rate. And they stated that in their own financial reports. So they're a market driver because of their behavior. They bought their first building in 2011. As I mentioned earlier, they own 78 in Ontario now, and that's in 9 years. They actually had it up to 91 at one point, but they sold 13 last year. So they have a business model they employ to maximize their profit. And LJ's described a situation where he's charges a reasonable rent, but he's not a market driver. These corporations are. They buy a lot of units, and they implement business models designed to exploit weaknesses in our housing market. Housing's not a right to them. It might be a right expressed by, a recent federal law and international human rights declaration, but they see it as an asset. They see it as something that they intend to maximize their profit. So that's the situation going into. That's before COVID-19. COVID-19 is a perfect storm for a situation which the average rent for a 2-bedroom apartment is $2,000 a month. Okay, and when $2,000 a month is the rent for a 1-bedroom apartment, and the relief described by the Canada Emergency Response Benefit, or EI, the maximum is around $2,000 for both of those benefits. You get an either or. Well, that's just rent. And that's not food. That's not prescriptions. That's not any other bills that you want to pay. Fundamentally, we already had a sick market.
Yeah.
Something that was unhealthy for really realizing the value of housing as human right. When that amount of rent is being charged as a proportion of available gross income, we are looking at price gouging in that kind of a market situation. And so we already had something unhealthy. It's been growing over the course of a decade, and then COVID-19. And now we have a lot of people who are losing their jobs, losing their income, seeing reduced income, and they're month to month. And it's not a small number. It's not 5% or 10%. We're talking about, if half the tenants in Toronto are, basically income precarious, so that's 750,000 people.
Yeah.
That's a lot of tenants that potentially affected by this problem. So, I mean, that's the situation before this hits, is that we already had a very, frankly, fragile housing market that really had a lot of people already in a precarious housing situation. And now a lot of them don't have income. And it's a perfect storm. It exposed all of the weaknesses that we see in terms of our housing market.
Yeah. So there are two things that you and I had talked about, right? We hear a lot about tenants. At first, it was like, hold back the rent for April 1st, right? Because one of the things that I had heard was, well, if they're going to get mortgage deferrals, if landlords and homeowners are going to get mortgage deferrals, well, I need to get a break and I don't need to pay for rent. And so I thought the conversation that you and I had about that position was very interesting. So would you mind kind of like, I'd love to have you share your ideas about the movement to hold back rent, right? And also the experience of vulnerable tenants and also the policy pieces.
Sure. So the Achilles Tenants Network took an emergency April 1st position that we wanted to see official policy allowing rent deferral for the month of April. We also wanted to see money from the federal government. So we wanted the provincial government to take that position because that's their jurisdiction. We wanted the federal government to take a position where they would pump money into rent banks, municipal rent banks, and work with municipalities to relax their rules around loans to make them more broadly accessible, and to ultimately look at a process of turning those into grants for those that would need that. So that was an emergency thing. It became evident that whatever money the federal government was gonna have flow, the crisis was hitting so fast that even when that money started to flow, it was going to be after April 1st.
Yeah.
So we were talking about deferral at the April 1st. We were talking about pumping money into rent banks. That's not a long-term policy. That was an April 1st position. But we took that position because in part our tenant network has taken a position that we want to stay within the bounds of the law. we're aware of how much energy there is around rent strikes. And I'm going to be honest, within our own network, there's been a lot of discussion with it. A lot more voices involved than we've seen before in discussing that issue. So there's more passion and more energy for it, but what's driving it is housing insecurity. That's housing insecurity. That anxiety is already there, but now all of the nightmares are coming true.
Yeah. I think that right now the Ontario government has said that you're not allowed to evict anyone, right? And what I understand, April 1st has come and gone. The next milestone is going to be May 1st. So we had a conversation where we were talking about people, landlords giving out N4s.
Yes. So an N4 notice is a threat. Essentially, it's a statement that they're going to seek eviction because of failure to pay rent. But it reads a lot like an eviction notice. And when you have less sophisticated tenants who aren't familiar with, the ins and outs of residential tenancy law, honestly, they're going to think it's an eviction notice. A lot of them may be constructively evicted simply because they don't understand what they're reading and how that sits within the scope of the law. They won't understand its position within the law. Before I became involved in tenants' rights, and it wasn't by choice, but before I became involved in tenants' rights, I didn't know the difference. And I couldn't have told you the difference. I didn't understand my rights, and it's only in sort of being required to become educated that I understand the differences between the notices and what the law requires in terms of process. We've also talked too, though, even if you understand the process, our concern is that there's no official policy doesn't give clear guidelines to either landlords or tenants about how they manage themselves through this relationship. Now, LJ's talk about having relationships with his tenants and wanting to be punctual and have good communication. My landlord is the exact opposite. But the difference is my landlord is going to affect 8,000 lives. LJ is going to have like a dozen tenants. And in terms of getting them to take a position or to take a policy, they have been silent. And we know from experience that they're willing to exploit vulnerable people to get what they want in terms of maximizing their profit. We've seen that in terms of individual cases we had in our own buildings. So in terms of talking about the N4, that's kind of where that goes.
So Sean, one of the other things that you had talked about was putting forth a proposal for the rent ban. Can you speak to that a little bit?
Well, yeah, there's already, one of the reasons we picked that as a policy is the infrastructure is already there. It's just a matter of loosening rules and getting money to flow into it and making it more accessible. And it's, once the applications are already in, then there's the opportunity to then, introduce a process to turn some of that into grants. And our thinking around that was to take what's already there and get it in front of people as quickly as possible with small modifications. And this was our April 1st position. Like I said, we thought it's happening fast. Deferral plus the rent bank would give people the tools they needed to quickly access something and also give the government solutions or at least some proposed solutions in the short term, getting some money into people's hands to solve the problem of the deferred rent. Because the debt in our proposal, the debt didn't go away. It's still there. It's still got to be paid. So, but things have been moving so fast. Now we're looking at a much longer term of emergency. And this was 2 weeks ago. It's like 2 years ago.
Yeah.
This crisis.
It feels like a long time.
But that was the goal. That was our thinking. How do we propose solutions for April 1st that get people to May, and so that's where our proposals were. That's what we put in front of the Ontario government and the federal government and the municipal government.
Yeah. Sean, I've actually got a question from the audience, which is about related to renters and rental property owners. And maybe this is also something that LJ, we might come to, but I'll put it out there and then we can come to this question again after, is how did the lack of supply leading up to COVID-19 impact our current situation for renters and rental property owners? So Asquith asked that question, and I don't know if anybody here wants to answer that, or we can address that after LJ gets a chance to talk, but I'll just put it out there right now.
Okay. Sorry, Lee, is that a question for me, or is that something that we want to show?
Well, I guess let's wait for the end, and then what I might do is we'll unmute Asquith, and he can ask his question so that we can really get an understanding of who he's directing that question to. So thank you very much for the question, and thank you for the clarification. So thank you very much, Sean. I think those are important pieces, and I think we need to talk more about like the tenant perspective, because it's something that I don't think we always hear about, and it doesn't always get personified. Right. I wanted to take a moment now and just go to LJ, and like LJ, Sean's been talking about his corporate landlord, multinational landlord, and the challenges that they're having there. Can you, LJ, as a local residential landlord, and one of the things that I know is that most landlords, residential landlords, which actually make up a lot of the rentals that are out there, are small-time landlords, right? They're not big corporations. Can you give us a sense of how COVID-19 has impacted you specifically as a small landlord?
Well, like I said, I don't, at this particular time, I think a couple of things being said here either relate directly or indirectly to our situation. At this point right now, COVID-19 has only affected me in the fact that the initial purchase of I'll talk specifically about my second house, which is, in both cases, I bought houses that are in bad condition. Mm-hmm. And with the intent to put money into them and make rental properties out of them. My second house, I had 2 days after the wheels fell off and the COVID-19 blitz began. 2 days past that was my scheduled building inspector appointment where I was going to get occupancy. So, and he called me and very nicely called me and said, sorry, that's not going to happen. Book something after April 6th, which I did immediately and found out, of course, as expected, City Hall is not opened up again. Building inspectors are not working again. So I am now 3 weeks into what theoretically around this time or shortly thereafter, I was looking at finally making some income, and I've been paying a mortgage payment, insurance payment, whatever else on the house up until this point. So directly, that's the biggest thing at this point for us that I think, in anybody in my situation. My other property is still operating. I have a young couple as a renter. I have students as renters, and I have a single male as a renter. And none of them yet have been, at this point, knock on wood, have been affected that they've told me to the point where they can't pay rent. Obviously, May 1st is a new situation, and they may or may not be within that. I know that the students have applied for some sort of relief, and they're going to be able to continue unless they, use their free time in a way that spends all that money. But ideally, they're putting a little away for rent. And if that's a problem, like I said earlier, that's going to be the thing. The biggest issue, as I say, is getting the work done and providing those spaces, both for tenants to use them and for me to pay my bills with them that I can see at this point. I would say that, we talk loosely related, although not COVID related, to what Sean was saying. there are already in this, I don't know what the number is. I'm sure there's many legal apartments in houses, both, people's basements and other properties in this city. I have no doubt that there's even a greater amount of illegal apartments.
Yeah.
There is definitely a need for more rental spaces in this city.
Yeah.
And I thought I remembered a number of years back where the city was going to loosen up some of the rules to allow more properties to go from the illegal to the legal and make more properties available because it wasn't something that was under the table. I can tell you, as somebody who's renoed and upgraded 2 different apartments, to stay on the legal side is expensive, timely, overkill beyond belief, and don't quote me, who's ever recording this, but if I by chance I came into money and bought another property, which is never going to happen, if that's the case, I can't tell you that I would seriously consider doing another legal apartment. That doesn't mean that I wouldn't follow the rules and make them safe, as I have in my business, in the theater business. We do everything by the book, but we don't necessarily have to follow the same building code instructions, but we do everything with code in mind. Safety first is always the intent. So somebody who has an apartment and follows the rules within reason, I think that's semi-acceptable. Obviously, you can't really say that. The rules that they have now for extra apartments in this city make it almost impossible for somebody to reasonably change those places into, and I can understand why people don't. Why would you bother? And what that does is it means that the people will not reach for that semi-safety thing. They will not make places that are reasonably safe or safe enough because the rules have dictated that you have to do it in a particular way. I won't get into boring you about all the details of it, but it is, if you think just equal, here I live in this house, here's the rules for this house. Here's this apartment in my basement. You assume that the rules are the same. They are not.
Yeah.
They're not at all the same. You have to go jump over a number of different hoops to get there.
Yeah.
It's not right, and it means that, in my opinion, it means that more people are stuck in, I'm pointing up because Sean's above me on the screen. I mean, more people are having to deal with the big evil landlord as opposed to a reasonable human being who's just trying to, pay their mortgage a little better or have a little extra income by using empty space. Yeah. Not COVID-19 related, but,
Well, I think it's a really important perspective, and I appreciate it because we've touched on what does mortgages rates look like, what does mortgage deferral look like, what is the long-term impact if someone is not able to pay rent, if, for instance, a tenant withholds their rent because they have also been impacted, and a landlord who does have a mortgage who will be financially impacted as well. Like there's a ripple effect that is happening at every level to every stakeholder. And I think that, the lens and feedback that you've given in the comments are just so important because I don't always think that everybody gets into the same room to talk about the different perspectives, right? And about the realities of, if I'm a homeowner and I just want to refinance my house, that's one thing. But if you are a small-time landlord who is, this is your retirement fund, right? Like you are in the arts sector, and you have also just unfortunately had to lay off a lot of talent that you did not want to lay off, and
especially today.
And it's hard, right? Like, and I think we have to remember that it's real people who are on all sides of this, and then we have to try and manage this in a humane way to ensure that housing, which is a universal human right, needs to be recognized that there's housing and shelter for all. The question is, how do we, how do we deal with this through a policy level, through a market value, a market perspective, a commercial perspective, through corporations? I don't know. Like, I think these are all really great points that people have brought up. And I don't know if there's any last thoughts that you wanted to add, because I think that I'll turn over to Askwith to ask his question. But if anybody else has any questions, then we'll ask those. But Lynn, Sean, LJ, do you have any last thoughts that you want to kind of like share or reiterate before I turn it over to the audience?
My only comment would be that it's unfortunate. I think if I'm understanding LJ's situation properly, you got stuck in the middle there. You were one of those, you're in that no man land because as you said, you were 2 days away, which is so unfortunate. Otherwise, the process could have worked for you. I do question why they do make it so difficult to make it legal. And Lee, you could probably answer more to this, but there really is no benefit financially to people making it legal, because the sale of a home that has a legal unit in it and a sale of a home that doesn't often have much difference in value, right? So what's the encouragement to do legal? With or without COVID-19, LJ just got stuck in the middle, because investment properties can be, my husband and I own 3. And they are a great way. I've financed many of them. They are a very great way of adding to your income, and especially if you can do it when you're younger, in the sense that by the time retirement comes, that mortgage is paid for, and now that rent almost becomes like a pension payment to you. It is a model that can work really well, but like any investment, there's risks, right? And as not a big landlord, because that's not the business that we're in, we can only hope that in these terrible times, people have hearts. Like the 3 units that we own, and they're individual ones. They're not like a multi-unit residential like you seem to have, LJ. 2 out of 3 have already come to us and said, we can't pay.
Really? We
lost our jobs. One is a pensioner. Well, they're good because it doesn't matter. They're getting their pension. That's the third one that, great. One's paying. 2 others can't pay. But,
Yeah.
We're not throwing them out on the street, not that we could anyways, but we wouldn't. And we're working with them to do something.
I would hope that, I know, Sean, you're going to say the same thing or something like, or not like it, but, you have to think even Scrooge had a soul, the property manager of your apartment complexes, the guy has to sleep at night, at this time right now, you think they would be having the conversations amongst themselves, smoking their cigars and talking, hey, what should we, and saying things like, we like to have people renting our properties. We want people to, it's worth their while to have to make accommodation and discuss with your organization that they're not ahead of that. Being proactive like that astounds me,
Yeah, it is. Sean, thoughts?
Well, just a quick response. I mean, Keeley's Canada doesn't really like to talk to tenants associations. It's been our experience that honestly, it actually sort of drives our membership a little bit, to be honest.
And so it should,
Yeah, but and actually, just to speak directly to the crisis, I mentioned earlier that the payments through the benefits that are going to be available to people who've been laid off, they're basically equivalent to what the average rent is. To solve the problem, we might be looking at direct payments to tenants to help cover their rent, and that's certainly something that's been proposed. I know that the New Democrats took that position as an 80% coverage. We might also, for small landlords, maybe instead of looking at landlords within the umbrella of landlord, because honestly, My landlord is not LJ. My landlord is a multinational that, you know, has a certain business model that engenders a lot of rage. And so perhaps the solution is small business support for small landlords.
Yeah.
But to look at it differently, you know, there's a it's like I said earlier, LJ is not a market driver. Achilles Canada is. And we were talking about rent strikes at one point. Achilles Canada, the organizers of the rent strikes in the city, Keep Your Rent, connected to Parkdale Organize. That group had its inspiration through struggling with Achilles Canada Limited.
Yeah.
There's a direct connection with my landlord and the people organizing. The organization that gave birth to was ultimately Parkdale Organize, Keep Your Rent. So the behavior of those corporations that are driving the market has a lot to do with what's happening in the city right now. But I mean, at the end of the day, if we think housing is a human right, we were tremendously upset, or at least Premier Ford was tremendously upset about Pusatteri's putting up Lysol wipes for $30, price gouging. Well, now we're talking about homes. We've been talking about homes for a while, but when the rents are as high as they are in the city of Toronto, and they're eating up as much of the income of a tenant as they can, such that tenants can't save. They can't save certainly to buy a home and save for their retirements and their living month to month.
Yeah.
That's a lot of bottled up rage, and it's not reflective of the value that housing is a human right. It might be time for governments to start building housing directly.
Right. That's another whole other question. That's a really good point. There are players who are trying to build housing and wanting supports from the government. You know, from a real estate perspective, one of the largest corporations has just declared bankruptcy on 3 major buildings in Toronto. So those are some people who are first-time home buyers who have put their deposit in there and are possibly might not get paid back. You know, happy to discuss any of those at a different time, but what I want to get to is thank you, Sean, thank you, LJ, thank you, Lynn. I'm going to just turn over a question to Asquith, and then there was another question that came up with Corinne, which is related to, and I'll get to her after. So I'm just going to turn this over to Asquith for a second. So Asquith, I have unmute. Are you unmuted? Yeah.
I think so.
There you go.
Perfect. Evening, everyone. Yeah, I just was wondering just your, I guess, take on, I guess, the supply crunch leading up to COVID and what impacts you thought that had on the pandemic as it exists now.
Supply of homes in the market?
Of rental units, yeah.
Go ahead, Sean.
Well, I mean, certainly it's a tremendous factor that there wasn't a huge supply. I mentioned earlier that it was that lack of vacancy is part of what attracted my landlord to the market and other landlords like them. So certainly it's a big factor in feeding some of the, you know, the churn, if you will, of the market and the increases in the market.
Sean, you get some numbers about your company. The buildings, did they buy all their buildings or did they make any of their buildings? Did they develop their buildings?
They've never built anything. They don't build anything. What they do, so what they do is they buy a building and then they do renovations, and that increases the asset value. And then they borrow against the asset to buy another building. They do a renovation, they borrow against the asset value. And that's kind of how it works. Is that they increase the value of it, then they borrow again, and then they've got like a pretty great ball rolling, and they really have rolled through Toronto pretty fast.
The reason I ask is I'm thinking that, my opinion of the question is that, there are clearly not enough rental properties. It's the owner's market, right? There's not enough rental properties in Toronto, and forget about me and the small. I mean, I think that is a piece of the answer. But I'm curious because, again, people buy things and they start businesses because they want to make money at it, right? Well, that's the society we live in. So I'm just wondering why there's not more properties developed as strictly as rental properties as opposed to condominiums, which of course become possible rental properties as well, but there's a whole different way to getting there. We don't see a lot of rental properties being put up unless they're fit another side of that, possibly assisted housing and so on. I know maybe some of you know as well, but working down in the distillery area, the Canary District, whatever they're calling it down there, I haven't had an eye on a number of the properties being built there, and I do know that out of a half a dozen properties being developed right now, there is one large building that the developer is putting up as it's going to be a rental property. The rest of it, though, is condos, with the exception of a small amount of assistance housing stuffed into a little corner by the train track and such. I don't know. I don't know why. I guess unless an owner like yours is buying and rebuying and selling and reselling those properties, there's got to be more built, I guess, is the.
Well, let me just actually answer that question. So, Asquith, one of the things is we due to policies that have been in place, there's actually not been proper rental buildings built since the 70s, 80s, right? And so there was a huge glut. What ended up happening was a lot of developers were like, wait a minute, if we build buildings and sell them as condos, we will get our money back up front. Whereas if we do a rental, what ends up happening is that, someone hasn't purchased the building. They're paying rent on it, right? So it takes longer to get that money back. And due to this crunch, this shortage of housing, that has definitely, to Sean's point, driven up the cost of rental because people are competing for it. It's really supply and demand. There's not enough supply. And with Airbnb, all of these different components, right, where people who did have solitary units were like, wait a minute, I can get more money if I do it on an Airbnb versus if I just rent it on a yearly lease. And they felt more secure. Like, I know lots of people who have Airbnb units. And so a part of it is then all of a sudden there's a huge drive to build more condos. And we were actually on track to have like a big surplus of because it's still not going to fit the demand of $20,000 to $24,000 condos. Now, with COVID-19 now, all of a sudden we have construction, which was originally deemed as an essential work, has now been slowed down. I mean, to some degree, right? It's on a case-by-case basis, depending on how far along it is in building. But this is going to slow down construction, which is going to we still have people who need housing. And so that's probably going to create more of a demand for housing. Like our frontline workers are trying to find housing for themselves because so many people are afraid of, like, they have elderly parents, people who are vulnerable, people who are compromised, that frontline workers who are out there putting their lives at risk every day to take care of Ontarians, Torontonians, need to segregate and live somewhere else. And the cost of even a rental is so high. So we do have a huge glut. We do need more properties. And we need to, I think this move towards, having more new builds, and also finally we're starting to see, even on a commercial market for commercial buildings, we have the lowest in all of North America, the lowest vacancy rates from a commercial and even on a residential level. So that supply and demand really impacts the cost factor. And what happens is, if you have a lower income, you can't live in the downtown core, right? Like a bachelor in the downtown core is like $1,800 to $2,000, right? Like, and so the cost is going up. You have to move further away, and then it comes into transportation. So there's lots of pieces that are connected, which we have to work on. And I think it's demonstrated that housing is an essential human right, and we need to do more about it. I'm going to turn this over now to Corinne. Corinne had a question, and she says, I'm sorry if I missed this earlier. My tenant has paid half of her rent for April and plans to do the same next month in May. If she insists on the same reduction moving forward into summer, I'll be hard-pressed to pay my mortgage. What do I do? Corinne, I'm going to unmute you if you wanted to clarify that. And I'm going to think that probably is directed more towards Lynn. Corinne?
So, hi, Corinne. In that case, because whether it's been 100% of your income or 50% of your income, if you have had a loss of income, then I would certainly contact whoever your lender is. Now, understanding that lender volumes are extremely high during this time, so whoever it is has probably I would go to their website, and they typically now have coronavirus 19 information on there, frequently asked questions, and exactly how to get into, versus just a general customer service area, a coronavirus specific area, contact information. But yes, you would be, I would expect, be eligible because you're not receiving full compensation and can't meet the difference. Just an accountant speaking to you from a tax perspective, if you're going to defer on any mortgage, you want to defer on your investment property before you want to defer on your principal residence. That's because you are going to incur additional interest, and at least the interest on your investment property is tax deductible and isn't on your personal property. So if you need to do that, do it. If you cannot meet those payments, and if it's going to give you stress, there is relief out there. Take advantage of it.
Corinne, I've unmuted you if you had any follow-up question. And then I've got a question from Natalie Hart. Okay. So Natalie has a question for Sean. What groups are supporting tenants through this? So I'm going to unmute Natalie as well, in case she would like to add to it. But Sean, that's for you.
Sorry, could you just repeat the question again? Sorry.
Sure.
It's
what groups are supporting tenants through this? If there's a tenant listening to this and they're wondering what they should be getting in touch with, because they don't have a lender's website to go to. So what are their resources?
Okay, so I mean, it would depend on the situation. If they've lost their job, of course, EI or the Canada Emergency Response Benefit, and then the City of Toronto has a rent bank. They could reach out there. If they're unsure about understanding their rights, the Federation of Metro Tenants Associations has a good hotline to refer to. You could also check out the ACTO website or the CLEO website, Steps to Justice, for information on dealing with, for instance, evictions or different kinds of notices. And if they're an Achilles tenant, they could get in touch with us. But there are a variety of groups out there supporting tenants, and a really good one for specifically understanding tenants' rights would be the FMTA hotline. And then if they want just general information on the process, the Landlord and Tenant Board, they give them a call to understand what the board's processes are.
Thanks.
Is there anything else? Do you have a follow-up?
I don't. I just thought that, we provided a lot of information for the mortgage holders. It's equally important to talk about the contents tenants might have in terms of
Absolutely.
getting help for them.
Absolutely.
Both are interested parties in this dialogue.
Yeah.
Mm.
Thanks so much, Natalie.
I would hope that if your landlord is, an individual, that, I'd reach out to them. And hopefully they're decent people.
They're not all LJ.
It's true. My one comment about if you're approaching a landlord about rent deferral, and you're making an agreement, you might want to get someone to look at the agreement before you really commit to it. Because you may be held to an agreement that you make around whatever the arrangement is going to be. I would recommend talking to someone about that agreement before you finalize it with your landlord. Getting some legal advice from a paralegal, perhaps through the landlord and tenant board. They may have some free services available that way. Community legal clinics, they may have some advice available too, just if you're uncertain about the agreement. And certainly you can call the FMTA hotline for some guidance. They don't do legal advice, but they may be able maybe a sounding board.
Yeah, that's great. Thank you so much, Natalie. Now, Corinne actually had a follow-up question. She wanted to ask, am I safe to contact my lender if the basement apartment is not a legally registered one?
Does your landlord or does your lender know that it is a rental property? So there's a difference for lenders between legal requirements, whether it's legally and whether or not it's properly retrofitted. So when there's also different in mortgage rates, interest rates between a rental property and a principal residence. Now, if it is a principal residence, it's owner or an owner occupied rental, so then they're not so much. So what does your lender know, I guess, is the question about the property? Or did you tell them that you were the only one there?
I'll wait for Corinne to type that message in. Denise has a question here, and I'm going to read that out in a moment. And I just wanted to point out, everybody, like recognizing that everybody is in a different place, whether you're a tenant, a homeowner, a landlord. I put in a handbook called the Coronavirus Anxiety Workbook, which is really just to help work through the fact that many of us are physically isolating and on our own. And just from a mental health and wellness check, I think it's a great book that I'm also sharing with students and colleagues and that. So I've posted that, so it's there for you to download. Now, Denise's question is, can Lynn speak to mortgages versus lines of credit? In these new uncertain times, should a landlord need to qualify for a line of credit to provide a cushion, this would also provide for property owners to be able to make large payments against their principal in good times. When tenants are expected to have a cushion, shouldn't landlords as well?
Totally agree. When I ever counsel somebody about an investment property and purchasing it, I always tell them that they should have a minimum of 3 months, preferably 6 months worth of either cash or access to cheap money. When I say cheap money, I mean low interest rates in something like a home equity line of credit. It's an investment. This is not a right of shelter for the landlord. This is an investment. So just like if you enter the stock market, be prepared that the prices that your stocks might fall. So be prepared that you may be without a tenant. A landlord that enters and doesn't have a little bit of a plan B is they're irresponsible. Sorry.
Some people might not have the funds. I don't know, LJ. What are your thoughts on that?
Yeah, but then you shouldn't be entering into that. It's not it's not my principal residence. If you do not, and then that's where a line of credit. It doesn't mean that you have to have 6 months sitting in the bank waiting there. But just like any, if you're a commissioned salesperson, if you're a real estate agent, don't spend it all. Have some in reserve, right? Because you don't know, tomorrow could be different. That's just the same way. You don't know. Right? Nobody knows about. No one could have ever imagined this. This is our worst nightmare. But the Landlord and Tenant Act, if somebody didn't pay, it could still take you a long time to get somebody out. If, not that we have this problem, but, if there was a supply, there was too much excess supply, then you might be people without a tenant for a little while. So this is part of the planning process in buying an investment.
Right.
You shouldn't buy and not have some wiggle room.
So you're recommending 3 months to cover your mortgage?
Yes.
LJ?
That would be lovely. I think it makes tons of sense, and I can tell you that is not our personal situation right now due to mostly renos. Renos cost a fortune in getting things done to get the place up to a reasonable property. But and I agree. I mean, at some point, I wouldn't say 3 months, but we have some ability to maneuver at this point. At some point, having 3 months worth of mortgage and payments available makes tons of sense. I don't know if it's realistic for all people all the time. The same thing's to be said for renters as well. I know that isn't close to possible, but we all should have a little something put away just in case it becomes a bad situation. I don't think, though, personally, I think there's a broader conversation about where we as Torontonians, Ontarians, Canadians as a society have to look at this thing, because I don't think a lot of what's happening and a lot of what's real applies. And I'll go to, or should apply. I think that whoever the power may be, whether it be the government or just people, making the right decision for society at some point, the mortgage deferment as a point, like there's no way, I have no interest in that at all. Even if I'm on the edge. I mean, yes, if I'm about to go under, that's going to be one of the routes I go down. But I have no interest in even thinking about that until it's the blackest of blackest holes, because I'm paying at the end of the day. And again, the bank's making money in the long run, which is their right to do so. But the bank's making money off of the situation we're in. And I think what I'm looking for is whether it be a government change in policy or the collective of the banks in Canada to say, we should do the right thing here. We should change this so it's not punitive to the landlord, so the landlord can pass it down to the renters and others from that. Now, okay, there's a unicorn in this room someplace, because it's just about as likely I'm going to find it as that's going to happen. But at some point in this experience we're having right now, something's got to give. Something's got to change, and part of that is not having that 3 months and saying to Sean, who's my renter, dude, you just keep living there. They're not going to take my house away. I'm not going to kick you out. There's got to be right decisions for the right reason being made moving forward as we go further this, because, we're all talking optimistically about September. That's a hell of a long way away, about the world getting back to some degree of what it is prior to this. And it never will be the same. And it probably won't be over at that point, So things have to change.
Yeah.
All this has to change. And we have to look at it in a different way. We can't talk about landlord-tenant acts being this, being that. Everybody has to look at it in a different way.
Yeah, I think that's great, LJ. I think now this is an opportunity. We've seen government work at lightning speed to respond to the needs. And what I'm seeing is basically the beginning of a basic pilot income, right? Basically, recognition that housing is a human right, you know? So I think that there's a great opportunity in this moment where people are having to really, within a matter of 2 weeks, the world was turned upside down. Mm-hmm. And in a matter of 3 weeks, the government is rolling money out to help people. So I'm going to just do one quick follow-up from Corinne, which she said that the lender only knows that I'm living here upstairs, unaware that I'm renting the basement.
That could be a little tricky because it really depends on the lender. Some don't like to know, but I would probably phrase it this way to them, that, you had roommates. So if you're qualified for a mortgage and you have bought the house and you qualify it for yourself, maybe things have changed. They don't like it when you've turned a principal residence into a rental and haven't told them, because there is they charge different interest rates. So I would tread easily, and every lender is going to be better or worse at that. So it is, you might be in a little bit of a dicey situation. I would limit the amount of information and just, again, every lender has different qualification process of how deep they are going. And what I'm understanding is a lot of them aren't going that deep into the questions before they will accept a deferral. Okay. So it's all going to be depending on how the lender sees that. And that's unfortunate.
Well, you know what, we're almost at 9:30, so I do want to wrap it up because we have had such a great conversation. I don't know, I want to thank each and every one of you for taking time out of your evening to really kind of share your perspective. I feel like there's so many points that we can, continue to talk ad nauseum from a tenant's perspective, the policies that we need to put in place from a landlord's, like a small time landlord, like what are the supports that can be there to help people. Many people don't have the luxury of a defined pension benefits plan, right? And people are working hard and taking what money that they've saved to leverage it. And, Lynn, to all the points about mortgages, lines of credit, how to talk to your lender and what is the best way to have a buffer, right? Like trying to work towards a 3-month buffer of some sort. And in all of this, recognizing that each and every one are intertwined and connected, in all of the different 6 degrees of connection that we all have. There is a ripple effect that if someone loses their job and they can't pay their rent, it impacts a landlord who, is counting on this as their retirement, who is then having to potentially remortgage, refinance, or figure out a line of credit through their mortgage agent, through real estate agents who are, trying to help people find housing, right? Like a lot of my colleagues and I are trying to find housing for our first responders, like whoever even knew, like anyone who has a client who might have a fully furnished unit, we're trying to, make it available. And that's just on a very small level. There's so many more other things that we need to address and deal with. And this is a moment, I think, in time where it's a lot of stress and it's causing a lot of anxiety, people losing jobs, people like LJ, you can't rent out your property until you get it approved. Really. And that's is that a month? Is that 2 months? Is it 3 months? I don't know. But I know that you're a great human being. I know that you've got mouths to feed, as we all do, and we all want to have a roof over our heads. And I think that this is a great conversation that we've just had that I hope can leverage to push policy pieces to help people who are at decision-making tables to say, yeah, what can we do differently? Because the government, where there's a will, they have made things happen. And I think this is our opportunity to really engage and be proactive. So I want to thank everyone. I really want to thank Toronto Danforth, PLA, for hosting this, Kelly Lynn for moderating, Karen for being the president and opening up this space. And, you know, everybody, all the panelists, Sean, Lynn, LJ, you've all been great. And also I want to thank everybody who attended this. Thank you so much for joining us. We will be doing more. Our next one will probably be on mental health and wellness, because we see that as something that's extremely important. And how do you stay connected in a time where we're not allowed to be connected physically? And so for everyone, you know, stay home, stay safe, and be well. And thank you so much.
Thank you,
everybody.